been trading fairly range bound between the 60 and 65,000 level the last several weeks, while a Fed rate cut was a catalyst that sent the crypto major on a rally higher. Bitcoin still showed some weakness last week as geopolitical tensions rose in the Middle East. Now, the crypto has apparently been consolidating in a range before the next major move. And joining me this morning is Brian DeMint, the Chief Marketing Officer at Orange Pill App. Good morning, Brian. Thank you so much for joining me. So first and foremost, give me your take on where you expect Bitcoin to go in the near future.
Well, in the short term, one of the exciting things we call UPtober in Bitcoin for a reason. Historically, Bitcoin always does very well. Performs, I think, in Bitcoin's existence, there's only been two Octobers ever where it hasn't had something like a 15 to 20% increase. So in the short term, we're looking pretty good. But that range bound that you were talking about, Bitcoin's short-term price in terms of 5 to 10% moves is always dictated by traders, and that's not the very fascinating part of this. The long-term macro trends, anything outside of 5 to 10% moves or 30-day moves, is dictated by the hodlers. And there's a whole cohort of hodlers here because of the BlackRock ETF and worldwide adoption that are going to prime Bitcoin or that are priming Bitcoin for major moves over the next 3 to 6 to 12 months. And that's where things get really interesting.
Well, Brian, if we look at the year-to-date gains for the crypto major, we are seeing it higher by over 40% today. But as we head into the rest of the quarter, we have a lot of event risk. So what are you watching?
Well, typically what we're watching in the short term is what type of daily purchases of inflow or what type of inflows are we seeing from things like the Bitcoin or the BlackRock ETFs, which, by the way, the BlackRock ETF was the most successful ETF launch in history, and that was particularly designed to buy and hodl Bitcoin. We are seeing more Bitcoin being purchased every day by these ETFs than are even being mined or produced that are coming online. So there's a critical mass that's happening between supply and demand on the Bitcoin side. And we see this every cycle. This is why we see this 4-year cycle. We see 4 years ago, it was PayPal. PayPal opened up Bitcoin purchases to its users. And so PayPal users were buying up Bitcoin at a slightly higher pace than were being mined or created every day. Now we're seeing that on an entirely different institutional level. We're seeing that with the institutional grade ETFs buying up a higher rate of Bitcoin than are being produced every day. So we're reaching a critical mass that's about to have a reckoning, and that historically happens in December of a halving year, and that December is 2 months away.
And finally, I do want to ask you about some of the arguments for Bitcoin's continued success from some of the biggest believers, and that seems to be the national debt crisis as well as inflationary spending. So give us a little insight into what the community is thinking right now.
Yeah, that's a great question, Remy. And it's hard not to sound doom and gloom when we're talking about things like national debt crises. But we kind of have what we call a checkmate moment when it comes to national debts. And beyond the national debt, what the implications are on sovereign currencies. We're not just seeing a national debt problem in one country and a sovereign currency problem in one country. We're seeing it systemically throughout the world, and that's because currencies are kind of ubiquitously tied together, and these debts are kind of ubiquitously tied together. What happens when a government has a debt that they cannot pay? There's three options, and that's why I said there's a checkmate moment. They can either have fiscal austerity, which that is not tolerable by by politicians, because over any 4-year period, no politician that goes towards austerity is going to get reelected because things are going to feel bad in the short term. Default. We cannot default on the bonds and the debt that we have borrowed, because that means retirees are not going to get paid back. So sorry, grandma, you're not getting paid back on that government bond you bought. That's not an option. So 100% of the time, governments choose option 3, and that is to devalue their currency in order to be able to nominally pay back the debt that they have. Sure, they have to take on new debt, but that's down the road. They can pay that credit card later on. What they're trying to do is pay the credit card today. And that's what people like Larry Fink they're constantly saying. They're saying we have a currency crisis And Bitcoin is the fix to that. So I'm not trying to be a doom and gloomer. We're just seeing the writing on the wall. We've seen what the plays on the chessboard are like, and we're seeing that there's only a few moves that can happen. And now the biggest players in the world are seeing that. Most of us crazy Bitcoiners were saying this 10 to 15 years ago, but now when you have institutions saying it, maybe there's something to pay attention to.
Okay, Brian, well, thank you so much for joining us, and thank you for sharing all of your insights today.
Thanks for having me, Remy.